Get ready, crypto fans, because the news cycle is absolutely exploding, and we've got the absolute must-know updates right here, right now. The pace is relentless, the action is nonstop, and if you miss this, you're missing out on the pulse of the market. We're diving deep into the stories that are shaping tomorrow, today, so buckle up and get ready for a high-octane download of everything you need to stay ahead of the curve. From massive corporate plays to groundbreaking technological leaps, the digital asset universe is buzzing, and we've got the inside scoop. Don't blink, because you won't want to miss a second of this. We're breaking down the biggest moves, the boldest strategies, and the shifts that could redefine the entire landscape. So, what's making waves? Let's find out. First up, a titan of industry is making an unprecedented move, signaling a massive vote of confidence in digital assets. We're talking about a staggering acquisition that's setting new benchmarks and showing just how serious mainstream players are getting. This isn't just a purchase. It's a statement, a bold declaration of intent that's sending ripples across the financial world. Get ready to unpack the details of this colossal buy and what it means for the future of corporate treasuries. Then, we're jetting off to Paraguay, where a major player is not just expanding, but doing it with an eco-conscious edge that's truly remarkable. We're talking about a massive leap in operational capacity, powered by the planet's own energy sources, and it's not just about scale, it's about sustainability. This project is hitting its stride, pushing the boundaries of what's possible in efficient digital asset production. We'll break down the numbers and the power behind this impressive feat. Next, we're tuning into the sentiment of the market's sharpest minds. What are the traders on the derivatives floor thinking? Are they bracing for impact or betting on a breakout? We're diving into the options and futures markets to see where the smart money is leaning, dissecting the signals that could predict the next big move. It's all about understanding the forecasts and the potential risks as we navigate through uncertain times. And finally, the digital and the physical worlds are colliding in a spectacular fashion, with a surge in assets that are blurring the lines between traditional investments and the crypto frontier. We're seeing a massive uptick in tokenized value, from real estate to commodities, creating new avenues for wealth creation and investment. This is innovation in action, and we've got the full story on how it's reshaping the financial landscape. Stick around, because you won't want to miss any of these incredible updates. Make sure you're subscribed, hit that notification bell, and let's get into it. Corporate gold rush accelerates. Strategy Inc. makes massive Bitcoin acquisition. In a move that underscores the escalating embrace of digital assets by major corporations, Strategy Inc. has executed a significant purchase of 4,048 Bitcoin, valued at approximately $449.3 million. This substantial acquisition, detailed in a recent Form 8K filing, brings the company's total Bitcoin holdings to an impressive 636,505 BTC, currently valued at a staggering $46.95 billion. The average price paid for this latest batch was $110,981 per Bitcoin, a figure that reflects the ongoing trend of corporate treasury diversification into cryptocurrencies. The financial maneuver was orchestrated through a series of at-the-market ATM programs, which collectively raised $471.8 million between late August and early September 2025. These programs, including offerings like SDRF, SDRK, SDRD, and MSDR ATMs, highlight a sustained investor appetite for securities linked to Bitcoin, demonstrating the success of Strategy's innovative financing strategies. Notably, the SDRK ATM, with its $21 billion capacity, offering 8% Series A perpetual strike preferred stock, has been particularly effective in attracting capital from both institutional and retail investors. This strategy allows Strategy to build its Bitcoin reserves using conventional financial instruments, thereby enhancing its legitimacy and accessibility within traditional financial markets. Strategy's commitment to expanding its Bitcoin treasury is further evidenced by its adaptable financial approach. The company has recently updated its financial strategy to permit more flexible equity issuance, even when its multiple to Bitcoin net asset value, MNAV, falls below previously established thresholds. This agility is crucial for continuing its accumulation strategy during periods of market fluctuation. while the company's MNAV has seen fluctuations, including a dip to 1.57 after a peak of 3.4 following Donald Trump's re-election. It has now stabilized as the firm pursues its aggressive acquisition plan. The pioneering corporate treasury model adopted by Strategy has become a blueprint for many other firms venturing into digital assets. Collectively, corporate treasuries now hold over $108 billion in Bitcoin, representing approximately 4.7% of the total Bitcoin supply. This approach has fundamentally altered corporate finance and speculative investing, establishing balance sheets as a consistent source of demand for Bitcoin. However, Strategy has not been without its challenges. Recent market reactions to its financing tactics have included skepticism, with one preferred stock offering raising only $47 million, falling short of expectations and leading to a renewed reliance on common share issuance despite earlier assurances to limit dilution. Furthermore, the competitive landscape is intensifying. Investor interest is increasingly diversifying into other digital assets, with Ether-focused treasuries alone accumulating over $19 billion. The advent of spot Bitcoin exchange-traded funds, ETFs, has introduced a new layer of competition, offering investors direct exposure to Bitcoin without the complexities of corporate governance, leverage, or share dilution associated with companies like Strategy. Adding to these pressures, nearly a third of publicly traded companies holding Bitcoin reserves are currently trading below the value of their Bitcoin assets, raising concerns about liquidity and the potential impact of convertible debt. A significant downturn in Bitcoin's price could dampen enthusiasm for treasury-style strategies and negatively affect valuations across the sector. Despite these headwinds, Strategy remains confident in its long-term strategy. The company's updated guidance for equity issuance flexibility and its potential inclusion in the S&P 500 index are significant developments. S&P 500 inclusion could attract billions in passive investment inflows, elevating Strategy's status among major equity portfolios. To foster trust and transparency, the company maintains a publicly accessible dashboard detailing its Bitcoin holdings, security prices, and performance metrics. Bitcoin's price resilience is bolstered by ongoing institutional allocations and continued corporate acquisitions, with Strategy's latest moves occurring amidst broader market trends. Analysts anticipate further corporate Bitcoin announcements in the coming months, signaling increasing mainstream acceptance of digital assets as a strategic corporate holding. While market volatility persists, the growing adoption of Bitcoin as a treasury asset suggests a stabilizing market. But is this corporate buying spree sustainable, or are there hidden risks on the horizon? Stay tuned as we explore the operational might and green energy focus of HIVE Digital Technologies in Paraguay. HIVE Digital Technologies powers up. Paraguay project reaches 18 AS on hydroelectric energy. HIVE Digital Technologies, a prominent player in the digital infrastructure space, has announced a major achievement with the completion of Phase 2 of its Yguazú project in Paraguay. This milestone brings the company's total global Bitcoin mining capacity to an impressive 18 exahashes per second, AS, while simultaneously boosting its daily Bitcoin production to over 8.5 BTC. Crucially, these operations are powered entirely by renewable hydroelectric energy sourced from the Itaipu Dam, one of the largest hydroelectric facilities in the world, underscoring HIVE's commitment to sustainable and cost-efficient mining. The Yguazú facility, a 200 MW operation, has been successfully completed and is running at a global fleet efficiency of approximately 18.5 joules per terahash, JTH. This efficiency rate places HIVE among the industry's leaders in energy-conscious mining. Complementing this, Phase 3 of the company's expansion at the Valenzuela site has also been energized. This marks the third 100 MW block of green energy infrastructure HIVE has developed in Paraguay. With Phase 3 construction substantially complete, the company anticipates having ASICs deployed in the coming weeks. Upon the full completion of the Valenzuela site, expected by U.S. Thanksgiving, HIVE projects its daily Bitcoin production to reach approximately 12 BTC. This output would represent roughly 3% of the global Bitcoin mining network's total hash rate. The company has secured all necessary ASICs for this expansion and has made the required capital and operating expenditures, ensuring a smooth execution of its growth plans. These expenditures are within the company's budget, and the ASICs for Phase 3 have been paid for and are currently in transit, with initial batches already on site for installation. HIVE operates a distinct dual business model, integrating both Bitcoin mining and artificial intelligence, AI, cloud computing services powered by graphics processing units, GPUs, in its high-performance computing, HPC, data centers. This diversified approach offers a significant advantage over competitors, providing revenue streams that are not solely dependent on Bitcoin price fluctuations. The AI cloud computing segment capitalizes on the burgeoning demand for processing power in the AI sector, creating a complementary growth engine for the company. The company's strategic location in Paraguay leverages the stable and cost-effective power provided by the Itaipu Dam. This hydroelectric power not only ensures operational cost stability through fixed-rate agreements, but also aligns with growing global demands for environmentally sustainable business practices. This focus on green energy is particularly relevant as the mining industry faces increasing scrutiny regarding its energy consumption. Management anticipates that its growth trajectory will remain consistent with the established economic models of its Paraguay operations. Each additional exahash deployed is expected to increase daily production and revenue potential, while HIVE's cost structure is projected to remain predictable due to the fixed hydroelectric power rates and minimal additional labor costs. While actual results may vary based on network difficulty and Bitcoin prices, the company's strategic planning and capital deployment for expansion are robust. Darcy Daubaras, HIVE's chief financial officer, emphasized the company's commitment to delivering strong and sustainable performance, driving sector-leading efficiency, and creating lasting value for shareholders. He highlighted the dual-engine model as a key factor in positioning HIVE at the forefront of digital infrastructure and next-generation finance, allowing it to scale Bitcoin production while simultaneously growing its HPC division. This expansion is impressive, but how are the market's sharpest minds positioning themselves for the future? Let's dive into the derivatives market and see what Bitcoin traders are betting on next. September signals: Bitcoin derivatives traders eye upside amid seasonal headwinds. Despite the historical tendency for September to be a challenging month for Bitcoin due to seasonal factors and macroeconomic uncertainties, derivatives traders are signaling a cautiously optimistic outlook. Current market indicators suggest a muted expectation for downside volatility, with traders leaning towards potential upside. Bitcoin has recently seen a modest bounce, trading around $110,000, according to CoinGecko data, though this uptick is characterized by flat cumulative volume deltas and a noticeable increase in passive buying at deeper order book levels. The derivatives market is reflecting this sentiment, with open interest in perpetual futures climbing by 2.35% to $30 billion over the past 2 days. This activity indicates traders are positioning themselves ahead of key economic data releases, such as the upcoming employment figures. The traditional bearish seasonality of September, coupled with the approaching end of the U.S. financial year on September 30, is prompting many investors to reevaluate their portfolios. However, the Bitcoin options market provides a more nuanced view. Sean Dawson, head of research at the on-chain options platform Dervy, notes a significant buildup of open interest at higher strike prices, specifically $120,000, $130,000, and $140,000, for the September 26 expiry. This suggests that a segment of traders is actively betting on further price appreciation. Dawson also explained the implications of market makers being net long gamma. In such a scenario, an increase in Bitcoin's price would likely be met with hedging activity from market makers selling Bitcoin, which could dampen upward momentum. Conversely, price drops would also be mitigated, as dealers would be compelled to buy Bitcoin to hedge their positions, creating a stabilizing effect. This dynamic contributes to Bitcoin's implied volatility, remaining near 30% over the next 30 days, a level that underscores the recent period of subdued price movements. Despite the general expectation of contained price action, there are indications of underlying caution. A key options gauge, the 1-week 25 delta skew, which measures demand for downside protection, saw a significant jump overnight, moving from 6.75 to 12. This sharp increase suggests that while traders anticipate a relatively stable market, they are also actively hedging against the possibility of a sudden price decline. The immediate direction of Bitcoin's price is heavily influenced by upcoming economic data, particularly Friday's non-farm payrolls report. Dawson suggests that a strong jobs report would likely serve to limit the impact of the historically difficult red September, rather than trigger a substantial rally. Furthermore, market expectations are heavily factoring in a 25 basis point rate cut by the Federal Reserve at its next meeting. Dawson warns that any failure by the Fed to implement the anticipated rate cut could significantly exacerbate the challenges faced by the market in September, making the month considerably more painful for investors. So, while traders are navigating these complex market signals, a different kind of revolution is brewing in the asset space. Get ready to discover how real-world assets are surging and reshaping the crypto landscape. Tokenized assets skyrocket. Real-world value bridges crypto and traditional finance. The cryptocurrency market experienced a significant surge on September 3, 2025, with real-world assets, RWA, leading the charge, marking a 6% increase. This remarkable growth highlights the increasing integration of tokenized assets, which are effectively bridging the gap between traditional finance and the decentralized world of cryptocurrencies. The RWA sector has seen a substantial influx of interest, with projects on the Solana blockchain reaching an all-time high valuation of $500.1 million, driven by growing investor adoption of tokenized real estate, commodities, and innovative platforms like Travelex. This expansion in RWA is attributed to blockchain technology's ability to enhance liquidity and provide diversification opportunities for investors. The increasing number of holders and overall activity within RWA projects on Solana signal a maturing market that is actively embracing tokenized forms of tangible and intangible assets. Platforms such as Travelex and Coinbanks are at the forefront of this movement, utilizing blockchain to tokenize various assets and democratize access to alternative investment avenues. While the RWA sector celebrated significant gains, the performance of other major cryptocurrencies presented a mixed picture. Ethereum, ETH, underperformed relative to its peers, prompting discussions among market analysts and investors regarding its current market positioning. Simultaneously, Solana, SOL, encountered short-term selling pressure, experiencing a dip below $200 after reaching a recent peak of $205. Despite this minor pullback, derivatives activity on Solana remained robust, with futures trading volumes surging by nearly 30% to $25.86 billion. Although open interest saw a slight dip to $12.2 billion, the overall trend suggests traders are actively repositioning rather than exiting the market. The broader macroeconomic environment continues to play a crucial role in shaping investor sentiment. Prominent financial commentators, including Robert Kiyosaki and Max Keiser, have issued stark warnings about potential financial instability, particularly concerning European bond markets. Kiyosaki has advised investors to hedge against fiat currency devaluation by holding Bitcoin, gold, and silver, citing risks in countries like France and Germany. Keiser, meanwhile, advocates for relocating assets to El Salvador, which has adopted Bitcoin as legal tender, as a strategic measure against geopolitical and economic uncertainties. These perspectives underscore a growing trend of investors seeking alternative assets amidst global instability. Despite Bitcoin's inherent volatility and criticism from traditional finance proponents, some analysts maintain that it serves as a vital hedge against geopolitical risks and monetary policy uncertainties. However, recent market behavior, including Bitcoin's dip below $108,000 and a notable shift of assets from Bitcoin to Ethereum by large holders, raises questions about Bitcoin's long-term efficacy as a store of value. This trend may indicate evolving market dynamics as investors diversify their digital asset portfolios. Looking forward, the trajectory of RWA and the broader crypto market will be significantly influenced by macroeconomic trends, regulatory frameworks, and advancements in tokenization technology. The continued expansion of RWA projects, particularly on platforms like Solana, signifies a maturing market that is increasingly integrating blockchain solutions with traditional financial instruments. As tokenization processes become more streamlined and accessible, the potential for RWA to unlock new avenues for liquidity and diversification is expected to grow, further solidifying their role in the evolving financial ecosystem. These market movements are certainly dynamic, but what's the overall sentiment from the traders on the ground? Let's check in with the derivatives market to see if they're betting on a breakout or bracing for impact. All right, let's do a lightning recap. Strategy Inc. made a massive Bitcoin buy, boosting corporate holdings. HIVE Digital Technologies powered up its Paraguay operations to 18 AS using green energy. Derivatives traders are signaling upside for Bitcoin despite September risks, and tokenized real-world assets are surging, bridging traditional and decentralized finance. Don't miss out on any of these crucial updates. Make sure you're subscribed, hit that notification bell, and smash that like button. Follow us on all our social channels for even more insights. We'll see you in the next one.